All right. Good morning, brothers and sisters, and welcome back to the educational session which I was supposed to post during the weekend. So I thought I've got some time before the New York live session today, and let me discuss what we have gone through since 25th of December. We've got to put it all together. The four basic pillars that we were discussing earlier on. That's the basic first step or basic pillars of technical analysis. You might want to keep note of all these 4 points that we've discussed precisely since 25th of December until the 5th of Jan. The first was signals. The other one, support and resistance. I would quickly revise as well, so it all falls in line. Trends, and the last one discussed was the Fibonacci ratios. All right. If we touch upon the signals part first, you got three signals to buy and 3 signals to sell. That is a morning star, a tweezer bottom, and an engulfing bullish. Those 3 are signals to buy, which would predominantly act upon the rising market. And then evening star, a tweezer top, and an engulfing bearish. They are the sell signals. Predominantly will be looking to act upon on a dropping or falling market. Support and resistance. The main point that you need to remember on the support and resistance topic was that if a rising market, that's what you're seeing, you would like to focus, or you would want to focus, or should focus on supports, while on a dropping market where you're seeing lower lows and lower highs, you would want to focus on the resistances. And then past support has got potential to become future resistance. Past resistance has got the potential to become future support and stuff like that. Trends, let's put it all together now. We'll apply trends and Fibonacci ratios on this particular chart view, and then pick up another practical chart as well. That would become a quick revision of all the 4 basic pillars that we discussed. Let's suppose this is a rising market, that is a sequence of higher highs, 1, 2, 3, 4 and 5 sequential highs printed, higher than the other one, previous one. And then you've got 1, 2, 3 and 4 lows also printed. I must say higher lows were printed, each low higher than the previous one. Whenever you see a sequence of higher highs and higher lows, that is an uptrend. On the other side, if you are witnessing or viewing a sequence of lower lows and lower highs being printed, that would be a downtrending market. You would want to plot rising markets as an A, B, C, D, and then you want to turn your C into A, and then D into B, again your C, and then D. only 2 points. You need to make sure that C should not drop below the previous A, and your D goes way above your B. It should not be a test, it should be a clear penetration. Here we have A, B, C and D again. Again your C turns into A, D turns into B, go on plotting your chart like this, please, until you have your last AB boundary in your hand. That is where the action would be, and that is where we would like to enter the market. Right? This is a historic view that has happened. We might want to trade here. So whenever you begin analyzing a chart, please don't try to find out a trade for yourself, whether you want to buy or sell. Precisely, if you can follow these steps. First step, the step number 1, which we have done here, is to plot the wave counts. This is not the wave principal way, it's a simple A, B, C, D and the repetition. Alright. Then what next would you do? The step 2 that you would take is to plot your trend lines. The immediate and intermediate, right? Or you'd say the internal or external or the inner or the outer, whatever. You'd want to then what's happening? Okay, you'll have to then find out your recent AB boundary. If you've done your ABCD correct, you would not find any difficulty doing so. Giving a benefit of doubt that the existing trend will continue on the higher side, you might want to spread your Fibonacci ratios across the boundary. This is a very simple method. I have not yet discussed the break of the trend line, etc. We are still assuming that this trend would go on the higher side. Simply you would want to place your Fibonacci resistance or retracement, sorry, that is Fibonacci support, hidden levels of support across the recent AB boundary, and then you would want to wait until the markets drop towards the converging points of Fibonacci ratios, retracements, a past resistance becoming future support, a trend line passing, and then would want to wait for a signal to buy. Once you have that buy signal, you can go long and you can also target at the same time by stretching your extension levels right there. Right. So these are the steps one could follow while dealing with an uptrend, and exactly the opposite you could follow when dealing with a downtrend. All right. Let's look at an example. If I can get a hold of a meticulous trend, I think Euro USD had one across 2017. Let's do that. We have taken profits here, at least for short term. Those who are trading with me right now. Okay, if you kind of plot or begin to plot, I've got A, B, C, can take a significant high, D there, straight D here, and then again I got A, B, C and D, and then latest AB boundary doesn't mean anything because it has already broken the immediate support here, right? So that doesn't point out anything. What we can do is simply draw a trend line, external and intermediary, and the internal trend line. You would want to notice that even the trend lines are off the track for now. They've been taken off, both of them. Okay, what it means, we haven't discussed the break of the trend line, but what it means is when your internal lines of or the immediate support trend line breaks, the market can do three things actually. You may want to pay attention here. This is the only complex portion. One, it might want to drift a bit sideways like that. Well, this market is not sideways. Okay. Point number two, and after going sideways, it might want to print yet another high. Point number two, or option two, it might want to drift in an ABC format towards the external support trend line, which I said is a possibility while we're discussing during our live sessions. Alright, but at the same time, we also discussed another possibility. So that is option number two. Option number three now. After the trend line breaks or the immediate support trend line breaks, market can form a rising channel again. This is a basic understanding. It would be a rising channel where you have a small ABCD. This is not the primary ABCD that we plotted. It's a small ABCD channel forming here. At least a sequence of higher high and higher lows. Okay. If you find something like this, you might want to draw a channel support line connecting A and C, and then wait to see if the prices would break the channel line support or would bounce from the channel support towards a new high. If you see a morning star or a tweezer bottom or an engulfing bullish signal appearing right at the trend line, the same substance, all the 6 points taken into consideration, you might want to go long over there. On the other hand, if it breaks below this channel line, you might want to go short with a target at least at the intermediate support trend line. All right. So for now, the recent boundary in the Euro USD, applying this technique, which all the steps that we discussed earlier, we might want to go on a smaller time frame, 4 hours, and work upon the recent AB boundary, which is what we plotted on the daily chart, right? The recent working or workable boundary is between 1.1715 and 2087. There might be one small high again, but that's according to the wave principle, which I counted waves again. Simply put, you can just take a retracement, allow prices to drop lower, somewhere at the 50% or the 60% support region, and then go long again if you see a bounce. Otherwise, it's gone. It's going for a big break now. Otherwise, all right. So that green line which you see, or we might want to shift on the daily chart. The other blue line is the line in sand for the bulls to remain or stay in control. All right. In between, if you see yet another high, which can be made from the current price action itself, then your working AB boundary would slightly change from the highs would change actually from 2087 to whatever the new high is formed. So in that case, you would want to change your recent AB boundary, and aggressive traders would want to go short after that. After the new high is printed, with a stop just above the high. On the conservative traders, on the other hand, might just want to have a flat scenario where you are waiting for price action to drop towards a Fibonacci support and the channel line support as well, and then go long with a stop below 1.1719. All right. So same can be applied on any chart. I mean, if you want, we are doing gold quite a bit of time. Let's see. But gold is a sideways kind of trading going on right now. What I can do is we can take a segment which has worked its way through the ABCD format. We haven't yet done a downtrend, so let's do that. I will just take 5 to 7 more minutes. Did you see that falling market right from the 1357, 58 towards the 1261 mark, right? That was the first impulse or first boundary on the downside. Let's see how we would have traded or plotted that. The first you can choose to make this as first A and then B and then the Elliott thing always comes first now because I've been doing that recently. We are all doing this on a real-time basis. I'm always doing a live session, whichever video that I want to record. I'm not recording on my PC and then editing and then uploading it. Each of my videos, I don't have any of them. All 104 videos are all online. See, when you're doing a real thing, I mean, the best part is that it should look real, because you're doing it real first of all, and then it can never go without an error. So you could have done A, B, C, and D, all right, and then change this C into A, D into B, C, and a low D here. Both are correct. And I would have chosen to plot A, B, C, D straight away. A, B, C, D, okay? In that case, I would have just got one boundary. Here I'm getting two boundaries, but doesn't make much difference. Okay, if we played this boundary, I mean, let's say we went A, B, and then C, Fibonacci ratio, retracement and extension. Once you have the AB boundary, the first one in your hand, you can always go there and spread your Fibonacci ratios. For the retracements, please remember the retracements are for the entry points where we are all plotting your C, all right, and extensions are for the exit points. Believe it or not, just after the first AB boundary printed here, that one, we would have went short somewhere around 38.2%. But whether you want to sell at 38 or 50 or 60, it depends. Sometimes it goes as deep as the 61.8%. Sometimes it retraces only the 38.2% and boom, reverses lower. So you can always take your chances at these levels, okay? And if you have been trading with me, sometimes we have faced a situation where we have entered earlier and or exited earlier, and the retracement or extensions have gone more deeper. That is precisely because I choose to enter or at least take a split between the 38 and 61. Right? That's why the reason we take a split. Okay, that's a practical way to deal with it. Immediately after the first AB boundary was formed, you would have chosen to do an extension already. There you are. Taking two levels of extension, 38 and 61, 127, 161, and see slowly but steadily prices graduated to those two targets. Okay, now once you enter at the first point C, selling the market, you'll have to place your stop loss above the resistance, that is A, that is 1357. You can always continue holding your shorts until the two targets are met. Okay, sometimes when it is specifically retracing or it is a corrective boundary, then you might be seeing extensions until only 61.8%. But if it is not just a retracement, if it's a primary boundary towards a trend, then you might want to keep your targets until the 161.8% in net dania, all right? So see how it graduated in the next AB boundary, and then again a C, and then a low D. Again your C turns into A, D turns into B. You have a 786 kind of a C here, and a new low. You would want to take it as a D, one more cycle here. Again C turns into A, D turns into B, C and D. right, you would have drawn your trend lines accordingly. Yeah, and then a number of ABCD boundaries, small ABCD boundaries would get converted after a certain target. Both the targets have been met. You can you can change this to a capital A and a capital B. And that was a capital C and then a capital D going lower. All right. So all in all, this is what we have discussed in the past 10 days since December 25th. 50% of what I committed as it's basically everything will be posted what I know over a period of time. But the first Christmas gift for first 50% of that was the basic four pillars. The next five videos I'll be uploading in the next 24 hours or 48 hours. Watch out for that, because if you are subscribed to the channel, you will always get a notification after the video is done. If you're there on the Telegram, I always have a habit of posting all the videos on my Telegram channel as well. That is t.me/Japee. Please don't think that's a promotional channel or something like that. I'm not at all intending to monetize it anytime, because my goals are different. So always feel free to subscribe to the Telegram and be subscribed to the YouTube as well. Each videos you'll be intimated, and if you're there on the Telegram, the only benefit you might receive is the trading calls. All right, if you're comfortable already, then there's no need to join. But if you're wanting to get those intraday or intraday kind of a trade signals, like what we did in the euros and dollar index and the bitcoins today, right after the UK session, you might want to join the Telegram as well. All right, so that's the conclusion part of the first phase one. That's the basic four pillars of analysis. Next videos, we already have two videos posted earlier on. That is the basic tenets of the wave principle and the fractal nature. Now the third video I'll continue with is the five major topics. That's, you already know that there are motive waves and then there are corrective waves. So we will discuss all the five different types of motive and corrective waves. First we'll take up the motive waves, and then we'll take up the corrective waves. Five sessions, five theories, 30-35 minutes each. Right. So watch out for these for those videos to be posted online quickly as well. We'll not be continuing with the 9 AM Eastern Standard, at least for now. Whenever I have I have a different plan actually. After a few days, we want to convert that session into a case study session, where we'll take up one chart and do a case study for that chart on all different time frames live. But that is after we complete the educational sessions. Let's go through that first. Maybe after 15th of January, we'll convert those 9 AM sessions to the case study sessions. Right? I'll give an announcement on the Telegram channel, and also on the live sessions if you're not there on the Telegram. All right. So once again, I have not declared this as an online session, but if you are online and listening to me, thank you once again for being here and having your time here. Or if you're watching this offline, and if you're liking these videos, educational or daily sessions, press the like button, share with others, and if you're not yet subscribed, please do go and subscribe yourself. This would be a one-point communication all the time throughout my life for this channel. All right. So until the next session, I'm going live in New York, 8 AM Eastern Standard Time, about 45 minutes from now. I'll see you then at that point. Right. Until then, please take care and God bless. Goodbye.